like to do, be sure it works. This is an interview by Roland Matthies of Harry Eger, who's chairman of the board and CEO of Security Bank Corporation. And the date is October 28, 1997. And the interview is being conducted in the office at Security National Bank in Springfield. Most of this talking will be done by Mr. Eger. I've warned him of the consequence of what he will have to say. Hi, Harry.
How are you, Roland?
I'm fine.
I appreciate the opportunity to, I guess, tell a little bit about the Harry Eger story and maybe some of my views. I guess that's basically what you want me to cover.
You bet.
Right. You wanted me to go all the way back, so I guess we could start off that I was born September the 8th, 1939. I started out very common, I guess you would have to say, way. My parents were married young, and we actually lived in my grandfather's stable. Now, I don't want you to get any correlation here between me being in a stable and anybody else that you might know who was born in a stable.
Mm-hmm.
But
also, there's no bull involved.
Yeah. So my grandparents had a home on Harding Road, right at the end of Plum Street, where Plum Street dead ends into Harding Road. And they were, as a matter of fact, I think at that time Harding Road was called Grube Street. And my father is one of 11. Very good Lutherans. That might surprise you, but he was one of 11. And behind that house on Harding, there was truly a stable. My father raised or had cattle that he would raise and sell. And after he and my mother had married, and it was discovered that I was on the way, back in those days, it was not too uncommon to find more than one family living on a piece of property. So my grandfather and my father and his brothers, they all worked together and put windows in this stable and managed to get heat to it in some fashion. I don't know how all of that. I do remember later on, many years later, I remember seeing this structure, and it was more like a chicken coop than it was a stable, but it had concrete floor and some stuff like that. We had to go up to the big house for the bathroom facilities. I lived there until I was about 3. On that same property, though, just would have been my grandmother's parents, and they lived also in a small structure.
And what was their name?
Their name would have been Mills, Mills. They were from out of Kansas, or I know this, but I can't think of it right now. It's either Kansas or one of the Dakotas. But the family was primarily German, and my grandfather was second generation American, and he came from a place out of Switzerland, the German part of Switzerland. The town that he came from was called Eggersried, and they were woodworkers. It was primarily their trade, so I don't know whether that Eggersried or Egger or some form of that last name must mean doing something with wood. So at any rate, I grew up where my father went on and went into business and was a small businessman here in Springfield. And I grew up, spent all of my life here, and married in 1960 and moved to Dayton shortly thereafter. And I was already in banking, met my wife at the bank. She was the boss's secretary. And when you're trying to move up, that's a pretty wise move to become involved with the secretary, the boss's secretary. And her boss's name was Don Bishop. And Don Bishop was quite a well-known gentleman here in Springfield. He's still alive, but is ill, and his boss would have been Don Wiggle, which whom you've already interviewed, and so I had a pretty good start with two very good banking gentlemen, and Linda and I, as I said, married in 1960. I had gone to the bank in 1959, and all my beginning in banking is once again, it was very simple. My father was going to help me find a job here in Springfield, and unlike you, Roland, and your children, one of whom was a classmate, Barbara, your daughter Barbara Matthies, was a classmate of mine in 1957. She was at the very top of the class. I was somewhere quite a bit lower in the class. You get that?
But you survived.
I survived. And but anyhow, I was going to have lunch with my father at the jewelry store, Gentile jeweler, and he was busy with a customer, so he just motioned for me to take a walk around the core block here in Springfield. And at that time, there were just one small store front right after the other. I walked around the block, and I came back again, and he was still busy. So I thought, well, it was not a bad day, so I would just take another hike around the block. And when I was going around the block this time, I happened to glance in at a bank that was then called the Springfield Savings Society Commercial Bank. I glanced in the window and saw a fellow there, Don Bishop. He was at his desk, and he was bent over some papers, but I figured that he probably wasn't busy. He didn't have a customer, right? So he probably didn't have anything to do. So I walked on in and said hello, and he said, well, what are you doing? And I told him I was walking around the block. My dad was willing to help me get a job, find a job, and that we were going to have lunch, and this and that. And he said, well, would you be interested in going to work in a bank?
How old were you then?
I would have been 19, 20, let's say somewhere in there. 19 and a half. And when I was all through talking with Mr. Bishop, I left his office, walked around. By now my father is finished. We walked to the Shawnee Hotel, which is one of the places that watering hole for businessmen at that time for lunch. And we sit down, and he was about to start off on, well, now here's where you might try. And I said, oh, by the way, and I made sure that I had ordered my dinner, my lunch, because if I had told him too early, lunch would have been all over. And I said, you know, Dad, I said, I start tomorrow at Springfield Savings Society. I said, I gave him the whole story I just gave you, walking around the block, and I said, Mr. Bishop hired me, and I started out as a management trainee, if you can believe that, at $50 a week, 1959. It seemed like just a world of money then. You could buy a new Ford at that time for around $2,000. So put all that in perspective. And the reason I became a management trainee, I had gone off to college, but for one reason or another, and it wasn't because of I didn't know Linda at the time, but I got involved in some other things, and my student career kind of took a sidetrack, but I had some college, and I was going to night school and some other stuff, and I kept on going to night school as time went by, but because of that little bit of college that I did have, I became a management trainee, $50 a week, and that was really the beginning of my particular career. Left Savings Society in 1963, and went to Dayton, and again continued on with my schooling. Some of it which they sent me off to school at a variety of different places, but mostly I would have gone to school at nights at places like Wittenberg or Excuse me, Wittenberg's on my mind. Seeing you do. UD, and then would have been one of the first students at Wright State when it first started. And moved on up the ladder, and when I left there in 1975, boy, I tell you, time does fly. 1975, at the end of 75, I left there, and I was by far the youngest vice president, because back then most people who were well up into the ranks of banking they had more gray hair, and their chest had begun to sink a little down, and that sort of thing. It was a different time than it is today.
Was this in Springfield?
This is in Dayton, Ohio. And I was very fortunate, had some very good leaders. A lot of people, a number of people helped me move along, and which I will always be very appreciative. I always have one little story I have to tell about Dayton. My days in the Dayton financial market. I was asked to be a United Way volunteer, and when you're asked by the boss, that's what you are. You're a United Way volunteer, and so they would have these meetings, luncheons, for all the United Way people to kind of keep the spirit going and keep it all rah 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 type sort of thing. And I happened to sit this very first day at a table with a fellow by the name of George Pringle. And George Pringle was an older man, probably about my age now. He was the chairman, CEO of Meade Corporation. And he lived in Dayton during the week. And on the weekend, he went back to his home in Chillicothe. And his story was a very interesting one, in that he had never graduated from high school. Didn't make it all the way through, but he was just a brilliant person and worked his way up through to be the chairman. He was a very, very influential person in the Dayton area, obviously, the Meade Corporation being the size that it is. And so I had met him at this luncheon, and just in making small talk, I mentioned to him about an idea that I had about sort of like replacing a credit union with a bank. To have the bank provide deposits or loans to their employees through their personnel department, and we would either give a reduced rate on the loan or an increased rate on the deposits, and we could handle all this through their personnel department, the applications and everything else, and then it wouldn't be necessary for them to have their own credit union. And again, this was just I'm just a very green young guy. If I knew now what I didn't know then, I would never open my mouth, because but when you're young, you're fearless, and you don't think about the consequences. Well, Mr. Pringle he was very polite and seemed interested, and got all through, and I left, and about a day or two later, I get a telephone call. Now, I'm a lowly loan officer at that time. I'm out on what is called the platform, which is my desk and about 15 others, and we just take one customer after another, and you're just a worker. And I get a telephone call, and it's Mr. Pringle, the secretary. Made sure I interrupted the customer because she recognized Mr. Pringle's name. So I speak to him, and he said he'd like to meet with me the next day in his office for lunch. And he wanted to discuss this thing that I had talked to him about. Well, I'm trying to remember now what I had talked to him about. And so I said, okay, and he asked if lunch about such and such a time would be okay, and I said, sure. And then I knew I had to go see my boss, who was about 6 down in the layers of bosses, if I could get off at 12 noon or whatever. Well, the day before, or an hour or two before I went over, the supreme boss, the chairman of the board, came back and said, say, what are you doing with having lunch with George Pringle? I said, Mr. Barth, he called and asked me. I just met him the other day, and I said, it could be about this idea I had. He said, explain that idea to me. And so I had to really kind of hustle it. I I didn't have anything in writing. It was just all kind of this figment out here or something. So I talked very quick, and so I went on over. Barth was a very stern, my boss was the supreme boss, was a very stern man, and no-nonsense type guy. So you report back here, and don't embarrass us, and all the things that really make you feel very comfortable about going over there and having it. So I had sweat dripping off my fingertips, but I go over to his office, and the secretary, boom, ushers me, oh, Mr. Egger, and I haven't been called Mr. Egger by anybody, And she hustles me right into his office, and there he is. He's sitting there. He introduces me, and he's just like we've been long-lost friends. And he introduces me to the treasurer, a gentleman by the name of Tom Hammer. And you can tell these people left an impression on me. Tom Hammer is the treasurer, and again, a much older man. He was probably 50. These people all look like ancient folks then. And the personnel director, and there was another person there whom I don't remember who it was, but I remember there was somebody else there, and maybe it was the secretary. Anyway, we had a nice lunch up on his office, looking out over the date and everything, and he said, well, Mr. Edgar, he said, I'd like for you to explain to Mr. Hammer, and now, see, I told you all these people had made such an impression, I can't think of the personnel man's name, who was also a nice fellow. And he said, would you explain to them your idea you mentioned to me? And so, boom, I had suspected right when I told my boss, maybe that's what it's all about. So I lay this all out. And Pringle said, well, gentlemen, after I had finished, he said, gentlemen, what do you think? And it wasn't like, well, we'll sleep on or anything. We think this is a good idea. Let's do it. And now I'm thinking to myself, oh boy, what have I done now? Because I haven't a clue. We had no infrastructure for anything like I was talking about.
Now, how old were you then?
I'm going to say about 24, maybe 25 on the outside.
Wow.
Yeah. Well, wait a minute, I can tell you, I would have been 27. I was 27. There's more to, there's the rest of the story.
Wow.
So, I went back and told Mr. Barth what we were going to do, and he assigned some people to help me get all the documents set up, and there's a lot of paperwork back in those. Well, it was all done by paperwork, very little computer stuff, though everybody had computers, you didn't use them like we do today. And so we got that all set up and over there, and in about 2 or 3 days it was done, and we were in position. Well, about a day after that, I see Mr. Hammer, Mr. Tom Hammer, the treasurer of me, sitting out in the lobby waiting. And I'm thinking he was looking at me, saying he must be waiting on me. So again, you had almost like an assembly line of customers, because they were mostly installment loan customers buying a car, or back in those days they bought refrigerators and stoves and everything else. And I finally, it's his turn, he comes back and he said, and he was very patient, very, very gracious, and he said, by the way, by now it's Harry. I'm Harry. Now they're still Mr. Hammer and Mr. Pringle, but they're calling me, I'm thrilled. I'm just thrilled to be called anything. And he said, Mr. Pringle had asked me if we had any kind of a deposit relationship with this bank. It was then called the National Bank of Dayton. And he said, I told him, no, we did not have a deposit relationship with you. So I'm here to open, if you will, if you'll help me, I'm going to open up an account today with a Meade Corporation. And by the way, we're going to transfer all of our deposits from the other bank, which was at that time called Winners Bank, which was a large bank. That was a large bank. And that transfer was in 7 figures, which back in those days, I mean, that was inconceivable. And once again, I could feel sweat falling off my fingertips. But, again, when you're so young, you just kind of roll with the punches, I guess. I never got really too nervous, quite frankly, but he just kind of got it all done. So we did that. And so that started to make me a little bit of a hero. And because I got the meat corporation account, which a lot of the big guys, and I had direct access to Mr. Pringle. Weeks go by, many weeks go by, and it's summertime now, and Linda, my wife, most of the time I would ride the bus home. Back in those days, you only like had one car. And I know we were poor, so we just had one vehicle. But sometimes she would come down, if I was working late, she would come down and pick me up instead of having me ride the bus home. So this one evening, she pulls up right in front of the Hallman building on 2nd Street, and everybody's gone. The street at a particular night was kind of hardly anybody around. So she pulls up in front of the building to pick me up. She gets out of the car with our son Todd, who was just a little kid, and probably 3-4 years old. And of course, he, like all little children, they'll come running and daddy, 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 and he jumps up into my arms, and I'm holding him, and Linda walks up, and she'd parked the car, they said, and it was a real, I can almost remember it because it was just a real nice early summer evening. And she'd kind of put her arm around me, and Todd wanted to look in the window of the bank, and so we were just kind of messing around a little bit in front of the bank before we got in the car to go home. So we did all this, and got in the car, went home. Next day, I get a telephone call. Here it is, Mr. Pringle again. He said, Harry? I said, yes. He said, this is George. And I don't know George from anybody, but I recognized the voice, and I said, oh, Mr. Pringle. He said, say, I was up here in my office last night, and I was just looking over your way. Was that you down in front of the bank, kind of late, and looked like maybe your wife and a little child, boy or girl? I said, yeah. He said, boy, I tell you, he said, that really? He said, that's just been on my mind. It was just a good old-fashioned Norman Rockwell type scene. And I said, oh, well, thank you. He said, I just want to make sure that was you. I said, yeah, it was. And I said, thanks for calling all this. Well, Mr. Pringle, as I said, was a very influential person in Dayton. So he had gone to, I think there's a thing called either the Bicycle Club down there. It was a sort of a high-powered businessman's place that they all met, most of them met on any kind of a daily basis. Well, this story gets around. Pringle tells the story. Now he's telling the complete story to everyone. And within a month or two, I'm an assistant vice president. I'm on my way. And it was all due to someone I felt who was just very, very, took an interest in me, and took an interest in me for a number of years after. He passed away years and years and years ago at sort of a young age, I believe. And by young age, I'm talking about in his early 70s. He took an interest in a little young whippersnapper who really didn't know what he was doing, but he was going to try something.
That's a fascinating story.
Well,
has Dick ever heard this?
I doubt it. I doubt it. It only comes to me every so often. When somebody asks me about my career, I think of all the people who helped me get to where I am.
Right.
And he would have been one of the big influences, but there are just hundreds and hundreds of other people who have been a big help to me. Your son Dick would be one of those people. I look at the people who have just helped propel me, or the companies that I've been involved in, the banks, to tremendous success, and that's really what you need. And you don't forget them.
How true.
Yeah. So that's that story, and I probably went way too deep on all that, Roland, from what you wanted. But after my career at Dayton, I had the opportunity to come up here to Springfield. A gentleman by the name of Hugh Brubaker was a trust customer of the bank there in Dayton, and whenever they had a little difficulty with him in the trust business, as you know, with your son in the trust business, that's a very personality type thing, and it's always very difficult to keep the customer satisfied. And so whenever they would run into trouble, and I didn't know Mr. Brubaker at all when I first met him, but because of my position over in the commercial loan side of the bank, which is what I ended up being head of, the lending, I ended up being head of all lending by the time I left in 1975, and I would have been 35 by that time. And so Brubaker was impressed with something, and he saw, and went and invited me to come up and meet some of the people here at Security Bank, and they hired me, and I came to work here January 1, 1976 and have been here ever since.
So the New Carlisle history was completely before you became a
Yes,
bank.
yes. All of that, the bank would have been the merger of the Guardian Bank and the New Carlisle National Bank, and that would have taken place in 1969. The bank's charter would go back to about 1903, the Security National Bank. It was a Morris Plan Bank and all of that. And we were a very small bank at that time. When I arrived, we were maybe 89 million at the end of 1975.
In what capacity did you start?
Executive Vice President, and with the deal that if I did a good job, that I would be president in 5 years, and that came about. And president and CEO. So, and it was an experience. Back in those days, banking was run completely different. People would almost pay you on a handshake. I had truly made loans on a napkin, an IOU. But under the regulations that are out there today, which kind of brings us up to date in a way, the regulations that banking is under this time is almost incredible. A real estate loan, which is one of the simplest loans to make, before you signed a note or mortgage and that was it. And today, I think it's 15 pieces of paper you sign in order to receive a rather simple loan.
I was a title attorney, which you call a title and trust in the Indiana division just before coming here.
I did not know that.
And believe me, paperwork was simple then.
Yes, yes. So the big changes in banking, that would be one. The regulatory, all these regulatory matters, we have an attorney that is in-house, that is our compliance officer, just to keep us from being fined by the OCC, the FDIC, or the Fed Reserve.
Even the EPA.
And even the EPA. Them particularly.
Oh, boy.
So you spend a lot of money today. We would estimate here, a small organization, we're 830 million. But our estimation is right now that we spend right at $300,000 a year in just compliance cost. That would be some people cost, but most of it's just compliance cost. That's probably light. That is probably a light number. That's our best guess that somewhere earlier this year. It's incredible. I meet, as a matter of fact, just coming Friday, having breakfast with the deputy controller of currency. A new person has just been appointed to that. And another individual who is in charge of our district. And that's one of the issues I'm going to bring up is the regulatory mishmash that we are going through. There just has to be a change. And we have to, the other item I'm going to bring up, Roland, this is something that we didn't have to worry about back in the 50s, 60s, 70s, and 80s, but I'm going to bring up the year 2000 issue on the computer situation. I got a thought. I'm not even going to embarrass myself by bringing it up to you, but I'm going to mention it to them. I'll embarrass myself with them to see if there's any merit to it. It would be something, a little different twist on year 2000.
Oh, come on, share it now.
Well, I'll give it very quickly. I wonder, and again, not understanding the issue entirely, but I wonder why not in the year 1999 have a short year. Don't have a full 12-month fiscal year. Cut it off in June, or better yet, cut your year at make it an 11-month year in 1999. Say maybe it's November 30th. And then that way, it looks to me like about the only thing we have really exposed to the year 2000 problem, at least on the start, would be would shorten the period down. Now, there's probably all kinds of reasons why that will not work, but it just, I figure there's somebody's going up with something very simple, and I'm hoping that maybe that might be the simple answer.
Oh boy.
So,
It would take time and change the tape. There, we're back in business.
All right, very good. Um, the differences today in banking, as I've already mentioned to you, my starting in banking was very simple. Uh, my primary background has been in business lending. Back in the old days, it was called commercial lending. Today, they call it business lending. And I would have probably never had the chance today to do what I did back then. And the reason is, it goes back to some of the regulations. Our loan officers today have to be almost quasi-attorneys. Again, because of the regulatory paperwork that's required if you make a loan or if you decline a loan. Just as an example, and I don't know how this will strike you, this is a new rule that went into effect September 30 of this year, 1997, that if we turn down a depositor, we tell a depositor, we do not want you to be a depositor. You're out here to open up a new account. We do credit bureau reports today on depositors. There's a system out here that will tell you if they've been a bad depositor at any other organization within about 17 states. Mm-hmm. So you go through all of this, and they're bad credit. They've been almost kiting to who knows what, and you say, sorry, we do not want you as a depositor. Now you now have to start giving them forms, notification forms, that tells them that they have been declined as a depositor. It's hard to conceive all this. And if you don't, if you don't give all of the forms properly, there are fines. And in addition to that, the depositor, this declined depositor, apparently can file some sort of civil suit against you. So these are the things that just drive you nuts anymore. Mm-hmm. I described to you the other day at a Wittenberg board meeting some of my fears about things that go on in the trust department, mm-hmm. where it's not just watching after the beneficiary properly, but now all of a sudden, if you once the primary beneficiary has passed on, in the banking world, up in the trust world, they would call that estate has matured. Mm-hmm. Okay.
Somebody died.
But now the kids, the children of the primary recipient, can come back and say, wait a minute, you should not have let mom take that trip to Florida, and a Chevrolet would have been just as good as that Buick that she bought, and then they would say that because the market has gone up X number of percent in the 3 years since she did that, and if that money had been left in there, here's what you owe us. It's crazy things like that that just drive you nuts. And my fear is that it takes the fun out of business. One of our core values here on our wall, we have 4 different items, and one of them is fun. Now, we're not talking about standing around and telling jokes and that kind of fun, but try to enjoy your work. Mm-hmm. And try not to take yourself so seriously that we're not doing brain surgery and going to do something that's going to harm someone. So don't take it too seriously. But I can see where a number of our people, trust people, loan officers, new accounts folks, that the pressure on them anymore to make sure they do some of this legal razzmatazz correctly can start to cause, it shortens their productivity, the span of productivity. If to meet with customers, almost, in some cases, they'll almost do anything to not meet with the customer because of all the risk that could be involved. It's not exactly, that's an over-exaggeration, but I think you can see what I'm talking about. It's not really an issue of burnout and that sort of thing, but I think it's just a constant pressure out here of making sure that all the I's are dotted, T's are crossed, and have all the forms. That's what it amounts to at the end of the day. That's a big, big difference from back when I started. You got the customer, and that's what you were happy. You serviced the customer, and he was happy. That made your life really good. Today, you can do both of those two things and still end up, as a banker, still end up having a little grief. So I think that that's one of the negatives, if there is such a thing as a negative. On the other side of the coin, all the positives would be starting on the loan side, starting somebody out, making a very small loan, and people are doing something in their garage, their basement, or some rental piece of property that they're operating out of. And we have a number of customers today that started out in garages, barns, and small, very small, humble facilities, and now are some of the leading companies around Springfield. Buying Me Room would be one of those. They started out in a very small barn. You and I would call it about a 3 or 4 car garage out here on the west side of Springfield in an alley. That's where they started. There are just a number of other companies around here who are just the same way, and we're blessed with that in Springfield. I get a big thrill out of watching somebody over, and it takes so long. I've been in it so long. I guess I've seen the whole cycle. Watch companies grow. They start out 1 or 2, 3 people. Wife's usually the bookkeeper, and then before long it's 15, and then before long you celebrate their 25th anniversary in business, and they may have 100, or they may still have 50, and everybody's doing well. And I get a lot of. It makes me feel very, very good to see that we have that going on almost constantly.
Well, I think this bank does a good deal more of that in the past and in the present than the other out-of-town banks.
Right. I think you're right. This is what I was into when I was in Dayton. I was into small business banking. Although I mentioned Mead Corporation, but that was a pure fluke. Okay. But most of them were small tool and die, spatial machinery shops, stuff like that. So I'm very, and when I came up to Springfield, that's what I went out and tried to get with those kinds of businesses here in Springfield. And I mentioned Viney, Cedar, and I could rattle off a number of more. International Steel Wool, places like that were very small businesses here. Sheehan Brothers Vending, we helped get them started. They were, really just operating out of garages. So, and I can just keep on going. And that's only been, I've been here 21 years, and there's some of they employ a lot of people. So, that part of banking is the fun part. The other part that's fun is just watching your own people that you work with at the bank, watch them come, and there are a lot of them that have gone. They retire, so forth, and many of them still come back. We hire some of our retirees back to do special projects for us. We have one out right now who is out, retiree who is a vice president. Time of retirement, is now out doing an audit on one of the branches for the audit department. So trying to keep everybody included, and communications is still the same old thing. I'm sure you faced that all your years, trying to communicate. That's still a major problem.
Volume-wise, how does this bank stack up to the other competitors in the county?
Well, we would be the largest now, by far. Not because I had anything to do with it, but when I came here, we were 4th, and we are now 1st. And in the interim of all that, everybody but one has merged with an out-of-town owner. one bank went completely out. The M&M, which was, when I first came to town, was the largest. It was the largest here, and they ran into the RTC problems, and they went under.
That was a really sad one.
Yes.
Imagine the embarrassment to Big Cush.
Yes.
Oh, I can't
Yes.
imagine.
Yes. So, so we've seen them. We've seen competitors also come and go. Just kind of, we have a very steady little process here, and it's we try to keep an open mind, and I guess be willing to take chances. And sometimes that means that you could relate, having an open mind and take a chance to, I guess I'm trying to say here, you relate those two things to, I had an idea there for a moment, and just said there's one of the things about getting older, and it scampers right on by.
You're talking to the old.
I understand. I kind of forgot. I lost
Well,
my train of thought.
one of the figures that I note in the balance sheet is reserved for loans that went sour in the somewhat 3 million bracket.
Mm-hmm.
Why?
Well, the loan loss reserve is there as an item that it's an accumulation of a monthly charge. We place into this an accrual. In our case, about $70,000 a month, and under normal reserve, following a normal formula. Now, I would have to tell you that we've also put in extra provisions at times because there's always the opportunity of a surprise when you're in the risk business of banking. And we've had it this year, we've had it last year, we've had it prior. Fortunately for us, I'm talking about a surprise.
Mm-hmm.
You never know when, even when you think you're on top of stuff in a business, things can go the wrong way very, very quickly. And so it's not uncommon to see probably the average charge-off of a total portfolio for banks would be in about I think it's about 0.5% of 1%. Historically, we have been below that, even when we've had some bad hits. I don't know where we're going to be this year. We took a large write-off just in the third quarter, sort of an unusual situation. And it had an effect, an after-tax effect on our income for the quarter of about $460,000, which, that's not great. Don't like that. But when we look at the whole big scheme of things, out of almost $400 million in loans, our ratios and rate of charge-off would be far below any kind of a long-term trend, usually even on a short term, 1 year to year to year, would be superior to our peers. I guess I look at it as just being part of the business. I try not to lose sleep over these things. I'm losing my hair, as you can tell, but I try not to make it an event. This goes back to an old philosophy that I've had for a long, long time. If you make too many things, you blow them out of proportion, or make them major events, particularly in the loan side, but it can be anywhere. Your subordinates will do about everything they can to start to hide it. And you can bury things for a while. I mean, it may not be very long, maybe in the way of months, but you can renew loans, as an example, and so forth. But if you have sort of a policy that, hey, a mistake has happened, it's part of the business, it's a risk, no one likes it, and I I know you, the loan officer, probably hate it more than anyone, but let's deal with it, get it off the books and go on, get out there and get some new business to make up for it. And that's kind of the attitude that I've had. I don't, you aren't chastised for having a problem. I'm sure it was a good loan when it was made. It just went bad after you made it, right? And I think that's something that we have worked hard here, is to not have a scapegoats, we're not a finger pointing bank in general. And stuff happens. It's just part of business. And I think we can keep rational about it.
You may not have heard the story at Wittenberg. John L. Zimmerman, who was a downtown attorney, was also the treasurer of Wittenberg Board of Directors. And he ran a mortgage loan business out of the endowment fund of Wittenberg, but he ran it out of his office. And he told his borrowers consistently, now you're just borrowing this for 3 years. I want you back here in 3 years. You don't have to pay a cent on principal. Just keep the interest coming in, and I'll renew the loan. Of course, he got a commission on that out of Wittenberg every 3 years. Well, about 1945, 46, when I was elected treasurer of the board, we discovered that Mr. Zimmerman's papers should be at Wittenberg, not in his office, and he had died. Have you ever been in a John L. Zimmerman law office?
No.
Pandemonium from the standpoint of storage. They brought the records over in bushel baskets.
Oh, my word.
That was our endowment loan
Program.
One man did it. Reese told us, let him do it. Some fun.
Mm-hmm.
Them days are gone forever.
That's right.
Yeah.
And you may have had an eye-opener there, too, right?
I sure did,
Yes,
yeah,
yes.
I should say.
Well, I think, like a lot of things in life, it's those experiences that make you, that make you learn.
Just get
Make
burned
you wise.
once.
Yeah,
Just get
right.
burned once.
That's right. And you become very wise.
Yeah, yeah.
So, and
Okay.
if you aren't doing any of those things, you haven't been exposed, I guess.
How do you look at the competition currently and the industrial outlook for this community?
Well, the competition is keen. Everybody is scrambling for some of the same things. The retail customer, that would be the consumer, is being bombarded with credit cards almost every day. All kinds of various marketing materials are sent to homes, and telemarketing and all that by all of our competition. I don't know where it's all going to end up as far as banking goes. Right now, the mutual funds have the upper hand. For years, there probably were not more than a couple hundred mutual funds back in the 80s. And today, there's probably 10,000. They're not under the same rules and regulations that the banks are. In the same way with the credit unions. Credit unions do a lot of good things, but they pay no taxes. They pay no federal income tax. So competition is probably not so much who your neighbor is down the street. This is my point. I look and see the office buildings of everybody almost here, but I can't see the Merrill Lynch account, the Cardinal Fund, the Fidelity funds, because those are all being handled over the telephone. You can open an account by just dialing a number, punching in stuff. So we don't know where those deposits are. We know that our total county has dropped in total deposits over the last 3 years. We're a little over $1.2 billion, $2.3 billion now for the entire county. We used to be able to keep pretty close tabs and could calculate how much liquid funds were available to the community. Today, my guess is that it's probably that banks today Clark County would have less than 50% of the liquid funds. Now, this is going on nationwide. It's not just Springfield, Ohio, Clark County. This is just everywhere. It's the ATM cards, the debit cards, all those sort of things change the way the consumer is looking at how they go about doing business. We are trying to continue on and as a traditional community bank, which is going to be centered on, even more so than it is today, on personal service. If you want to see a face, you go to Security Bank. If you want to deal with the machine, anybody and everybody has them. Grocery stores have their own now. Gas stations have their own. I mean, everybody's brother has one. So, at some banks, even here in Springfield, if you want to see a face, a teller, person to person, you pay $3. That's a charge. Most people don't know that that's going on. That's going on in Springfield. So those are some of the changes from that standpoint. Security banks, this is my opinion, security banks' real ace in the hole, if you can use that as a comment, I guess, would be our strength in the commercial banking side. Dealing with the business community, the big folks and the mutual funds haven't really figured out a way yet to be able to offer haven't been able to compete with those folks yet. They can offer lines of credit through a telephone or through mail, but when the customer really needs some help or needs some advice, they still want to come in and sit down and talk to the bank. And so we're thinking that we can keep ourselves going indefinitely by concentrating on the personal service issues. Trust department, again, is a good example of that exact thing. If you don't have people who can provide the good personal service, you're in trouble. So we're trying to I don't want to say restructure. We're trying to reinforce the personal service issues here at security. And that goes from myself throughout the organization. It's not the same. Probably won't be the same. And we need to move forward. The business climate here, I find, and I have to do this with a hand gesture so you can see what I'm talking about. The rest of the world, across the United States, they'll have the highs and the lows, okay, in the economy that goes on within their particular geographic location. Springfield, Ohio, Clark County, is about like this. Our highs aren't real high, and the lows aren't very low. So we're always kind of like in the middle. And a real high for us would be very modest for some of these other, places throughout the United States. So what that has allowed here is a lot of stability. And when I look at Prime, Ohio, you probably have been out there.
Oh, yeah.
I don't know if you've been out there lately. I was involved.
Amazing.
I was involved in that early on through the chamber. I forget how many acres were involved in that, 600, maybe 700 acres. Now it's all filled up, buying more land to continue this industrial park, new jobs to the community. We didn't find them where we originally thought they were going to be. We thought they were going to be from the service industry, and that's not where it happened. It happened in either distribution centers for large national companies or light manufacturing or companies that have products that we would relate to light manufacturing, as well as Navistar and Honda. So I see the business sector, and probably since the beginning of this decade, has probably been fairly strong. We have picked up a lot of jobs growing in that 35, 50 employment range that we haven't had around here in years, and they're just everywhere. Well, if one of them goes out on strike or they lose their primary customer, it doesn't cripple the community. Well, in '82, when we had Navistar, that was a terrible experience. We're going through here in 1982. Spent weeks and months on trying to figure out if they go out of here, what are we going to lose? We knew every customer that was an employee of Navistar. We knew every customer that was an employee of a company that supplied Navistar, that was in our market area. And then, once we had that, we went through and figured out what they had with us. We were on deposits, because all these deposits would have flown out, or we would have had loan losses. And when you think about that, you could have had both of those going at the same time. Deposits leaving and loans going bad. Because some of the depositors didn't have loans, you see. So it would have been sort of a double whammy. So we had that somewhat calculated, and we would not have put us under by any stretch, but it sure would have slowed our growth down. And all of that has pretty much taken care of itself. We've had some great assistance from the state government. The projects that have gone on downtown, we've been involved in most of them, including the Heritage Center right now, to the Cliff Center. I look over at Clark State. They built their building right across the street. Our building is only 20 years old right this month. There's just a lot of neat things that have happened here in our community. The Art Museum, we tend to forget these things. Now, I'm really going to talk about any of the things going on in Woodburn, but it's just one little thing here and there. The library. We have a great library.
We sure do.
All of that's come about, I think, since the mid to late 70s up to today. So Springfield has a little different attitude, in my opinion, towards, I can't say towards the community, but towards community involvement. I think some of the same old feelings towards various issues in our community are still there. But I think community involvement has definitely changed, and I don't know when it changed. You can probably answer better than I can. I assume at sometime in the mid-70s it started to kind of churn a little bit. When you think that we can go out and have people to buy $100 bricks for the Cliff Center, and just hundreds and hundreds and hundreds of people buying these bricks to help support a project for the millions of dollars we've gathered for any of these other projects. I find it incredible. I don't think you find that often in a community our size. You'll find it if there's one or two major industrialist types that have buku bucks, and they fund the whole thing. But when you find it so widespread, and it can come from anywhere.
Harry, we've reached the end of the road.
That's
You
great.
have talked for an hour, and you have talked with, I think, a particular attitude that I love to hear.
Well, thank you.
And I compliment you as a former debater and a former somewhat public speaking teacher. You didn't say "ah" once in an hour.
Should I do it now? Thank you.
It's been a real fine experience, and I've done this so often, and
I appreciate you taking the time.
You're doing a great job.
I hope it works out.